Hello and welcome to Ardent Partners monthly webinar series. Today, it pays to pay well, how to optimize your vendor payment strategy, featuring our own VP of Research and two esteemed industry experts who will share their research, views, and experience so that you will leave today's session with insights that you can use right away to automate and optimize your AP payment mix. And that's going to allow you to achieve superior performance and results in the near term and well into the future. So my name is Andrew Bartolini. I'm the founder and chief research officer at Ardent Partners, and I'll be your moderator today. Before we start, a few quick points. Everyone participating today will be getting a copy of the slides distributed by Ardent Partners tomorrow. Our sponsor, Bottomline, will also be hosting the webinar recording, and they'll send out a link once it's posted on their site. Now, we are reserving some time at the end for Q&A, so please feel free to enter any questions in the Q&A chat bar. And then finally, if you have any technical questions, you can contact the go-to support staff or chat me, and we will try to resolve those issues. Now, we have a very exciting agenda today. This is designed to show how you can strengthen your overall B2B payment strategy by utilizing technology to automate processes, improve vendor relationships, increase financial controls, and impact the bottom line. Now, wanted to talk a little bit about Ardent Partners. We are a Boston-based research and advisory firm that is laser focused on supply management and the source to pay process, including procurement, AP, P2P, the contingent workforce, and B2B payments. We advise clients and publish research that helps business decision makers understand industry best practices and how to improve performance. We also publish research that covers the technology landscape and helps professionals identify the best fit solution or solutions for their specific budget and requirements. Now, if you enjoy today's presentation, we invite you to visit Payable's Place, the global source for e-payables, finance, and AP news and research and analysis. Payable's Place features content from Ardent's team of analysts on topics that matter to AP and finance leaders, including cash management, AP automation, the evolving role of the CFO, supply chain finance, and the evolving payments industry. Now, I think I've got a fantastic opportunity to introduce a really exciting panel of experts today that are bringing decades of experience in the AP and payments realm. Let's start with Gunita Bindra. She's the Vice President of Commercial Product Management for Bottomline's Paymode-X suite of invoice and payment solutions. With more than 10 years of experience developing and executing strategic products and partnerships for evolving business needs. She leads Paymode-X as the solution seeks to meet and exceed the market's needs and transform customer AP functions through enhanced automation, security, and efficiency. We're also joined by Tim Ural, who leads the global commercial product team and is responsible for the product strategy for business-to-business payments at Visa. Tim focuses on the ability to create and deliver unique commercial products and services for market segments, including accounts payables and receivables, wholesale travel, fleet fuel, and emerging new payment flows. Prior to joining Visa, Tim held positions in product management, launching business ventures in equities trading out of New York and San Francisco, e-commerce, and supply chain management. And then last but not least, Bob Cohen is a VP of Research and the Vice President of Marketing at Ardent Partners, a seasoned professional with almost 20 years of experience helping enterprises transform their procure-to-pay operations. In recent years, Bob has become the industry's lead analyst covering AP and e-payables. At Ardent Partners, he heads up the e-payables practice, which includes coverage of AP, B2B payments, business networks, and travel and expense management. Prior to joining Ardent, Bob spent 12 years working as vice president at a leading solution provider, where he helped establish that company's US presence as a major player in the AP automation and procure-to-pay spaces. He has also worked in the commercial card industry, helping align products and services with a continually evolving market. Welcome to the three of you. Before we begin, all right, Gunita, I've shared a bit about you with the audience. Maybe you can share a little bit about Bottomline, today's sponsor.
Will do. Firstly, thank you, Andrew, and thank you to our listeners today. We appreciate your time, your attention today. Let's talk about who are we. So we're Paymode-X. We're end-to-end AP automation solution. We're striving to help companies automate their entire invoice to pay process and securely pay your suppliers. We're focused on three primary problems that we're solving for. Automation. We have a solution that will achieve and automate all your paper-based invoices, all your check payments, and convert them into electronic, which I know is a big part of our conversation today. The other is fraud risk. A lot of middle market, large market customers are experiencing fraud risk with their B2B payments, with their supplier payments. We're here to solve for that. Last but not the least, you can earn rebates on not just virtual card programs with us, but also ACH. We have a network of, I know the slide says 475,000, it's now 495,000 vendors that are part of our network that are accepting electronic payments through us. Keep in mind, if I were to add check vendors, that means vendors that are receiving checks from us, we're up to 1.2, 1.3 million suppliers. We process 275 billion in payments annually. So that is who Paymode-X is. I know Ardent Partners really named us market leader in AP automation fields. Bob, if you have any context you want to share on that, if not, let's move on and talk about our topic.
Yeah, Gunita, thanks so much for the introduction, and good to be working with you and Tim on this webinar. As Gunita mentioned, we have and Andrew mentioned as well, part of what we do at Ardent Partners are technology assessments, and we recently did a ePayables technology assessment, and as Gunita mentioned, one of the leaders in the space was Bottomline Technologies, and definitely, if you're interested in learning more about Bottomline Technologies, I highly encourage you to email us or Gunita or Bottomline for a copy of that report. You can learn more about how we came about our determination of this ranking and factors to consider there. With that, I wanted to start off with some real-time research here. I'm going to launch our first poll. We have a couple of topics that we want to cover with you. So the first poll is what percentage of your payments are electronic? And so while we're collecting the responses here, it'll be interesting to see, some of the data that you're going to see in this presentation was based upon a research survey that we've completed. And so we want to see how that kind of compares to the audience that we have here today. Does it mirror that? We think it will, but we want to find out a little bit more about that. So when you have a chance, please take a moment to answer the question here, and give you another 5 or 10 seconds, and let's see. So I'm going to close the poll here now, and then we're going to share the results. So, wow, pretty interesting here. So we can, the results are evenly split. So 47% of you have more than 50% electronic payments, and 47% of you have less than 50% electronic payments, and 7% are unsure because you don't measure it within your organization. So Gunita, Tim, I'm gonna bring this over to you. Does that surprise you that today's audience is evenly split? Some have more than 50% paper and some have less than 50% paper. Gunita, let's start with you.
So Bob, from my perspective, I was expecting more percentage, I would say greater than 50%, because we have seen great acceleration in the last couple of years for sure. Of course, external factors, pandemic, work from home, remote, us all working remotely has played into it. So I would say I was expecting more percentage of the audience to say greater than 50%, but again, there is huge opportunity. 40% of B2B payments are still being made on check. So I think we're seeing part of the population coming from there.
Tim, anything about this surprise you?
Yeah, I would echo what Gunita just said. I mean, certainly there's a paradigm shift that's happening in the market. Certainly over the last 36 months, as we've seen the pandemic drive what I would say more towards automation, control, and I would say transparency in the overall payment process. So a little surprised that we're still sort of neck and neck here at 47 and 47, but I think to Gunita's point, there's this tremendous amount of upside here, especially as organizations are looking to see more control, more understanding about what they're paying to which suppliers, and also how we make it easier for the suppliers to receive payments.
Let's take a look at our survey. So I'm going to have a little different perspective on the results, and maybe kind of add some insight into why the attendees were evenly split, and I think that may be because someone registering and attending today's session may be more likely to have more paper in their mix and be less automated, which is why they've come and attended this session. So I think that may be a reason why the real-time results that we have are lower than the survey results that Ardent has accumulated over the past year. So that may be one reason for that, and you're in the right place because we're going to talk about how to eliminate paper from the process today and the best way to do that. So as Gunita alluded to, the survey results from Ardent's research shows that 60% of payments are now being made electronically. While this is still woefully low, this is actually the highest level of payments being made electronically that our research has recorded since we started doing the survey. The good news is that it's gradually increasing. Unfortunately, it's not increasing at a rate as fast as we'd like to see it. However, as Tim and Gunita both mentioned, due to the pandemic and work from home restrictions, we think that this is going to accelerate. So hopefully next year when we come back and present the data to you, we're going to see a market change in this, so that where we're at, increased 10% year over year from 21 to 22. Hopefully next year we're going to see a much larger increase because B2B payments, as we'll discuss, really make sense. So Ardent's research shows that the typical AP organization continues to rely on older and manual and more inefficient paper-based payment processes. And the cost for making a payment is $8.64. While this may seem astronomically high to some of you who are using other electronic or digital means, that's the average price because many of our survey respondents and many businesses out there still rely on paper, as we just saw, and there's billions and billions of paper checks that are being issued every year and sent back and forth. And the cost of those paper checks is significantly higher than using digital means. So we're going to talk about ways in this presentation to take a look at ways to lower the cost to process a payment, as well as ways to lower the cost of processing your invoices overall there. So there's quite a bit of work that needs to be done. The good news is there's a technology and solution providers and experts out there that can help you work on and reduce this. So this brings us to our second real-time research and question that's here. And it is the second and last that we have here. So as Gunita mentioned, and as we've all seen and heard in the news, fraud, unfortunately, is on the rise. So please tell us, and the results are all anonymous, has your organization been the victim of a fraudulent attempt over the past year? So let us keep the poll open for a minute, and then we'll share the actual results from our survey as well and see how they compare here. So,
right, and Bob, I might just add, attempt doesn't have to be successful attempt, even if it was just an attempt and perhaps it was protected or stopped by your organization, we still want to know.
Yes. So we'll give you another second or two to respond. Okay,
this
let's
is going to
close
be
the
an
survey.
interesting one, Bob.
Okay. Tim, without seeing the results, what do you think the answer is going to be from our audience here? What percentage?
I'm going to say I'm going to go on a limb. I'm going to say maybe 64% of companies have experienced some form of fraud.
And Gunita, what about you?
I'd say 40%.
Okay, so let's close the results here, the poll here. Let's share the results. So,
Wow. Sorry.
yes. No, I was surprised by the results as well, but also, once again, as with the amount of paper that today's attendees still have in their process, the amount of fraud attempts, is not surprising either, that we're seeing such a high response here to this. And once again, the reason why this may be higher than the survey results that I'm going to show you here in a second is because many of the attendees listening in today, may be wanting to learn how they can reduce these fraudulent attempts against their organization. And so the survey that we completed, the data, the Ardent Research, shows that almost 4 out of 10 organizations experienced a fraudulent payment attack. They weren't all successful. We don't ask that question because, unfortunately, people don't want to share that with us. And also, there's many attempts or many attacks that go unreported that you don't even know about. So 4 out of 10 organizations experienced a fraudulent attempt. And unfortunately, this is something that we saw rise significantly during the pandemic, because as we know, when disaster occurs, criminals, fraudsters, whatever you want to call them, don't miss an opportunity to take advantage of the confusion that's going on in the marketplace. When organizations implemented work from home practices or work from home mandates, many organizations weren't set up to work remotely. They didn't have secure processes in place, and this enabled fraudsters to find openings and make many more attempts at extracting fraudulent payments. One of the largest forms of fraudulent attacks that we saw, fraudulent attempts, came via business email compromise. And Gunita, as we're seeing here on the right-hand side, talk to me a little about what business email compromise is, why we saw an increase, and the example that we're seeing here on the screen is one that I know you've studied closely and can talk about a little bit.
Yeah, so actually I'm going to explain all of that with just that example. So our listeners today, we're going to share a story with you. It's actually a real story. You can see the news headlines that we've captured here for you. Last year, on August 21st, 2021, town of Peterborough, actually New Hampshire, lost $2.3 million after cyber criminals tricked one of the town employees into sending a large payment to the wrong bank account. This exactly is BEC fraud. Some imposter trying to pretend that they are your vendor and sending you email, compromising that email by influencing you that they are really the vendor and influencing you to change the bank account. Now, how did the town find out? Actually, they were paying a school district, and I think the payment was around $1.6 million, and the school district never received the payment. So they actually called the town and asked, hey, I didn't receive my payments, and that made the town look into their accounts payable and see the emails back and forth that were so elegantly forged in order to make that scam successful. So that was 1.3, but in that digging, the town also found additional dollars that were sent again to a wrong bank account for another vendor of theirs. Now, this is a real fraud incident that has happened, not just long ago. That really tells us how vulnerable we all are. We're all humans. How much can we trust these emails that are coming in that pretend they're coming from Bob Cohen, but when you look into it, they might say Bob Cohen at some other email address or domain that we don't care to check, right? That's where technology, that's where automation, that's where fraud risk mitigation, that's where processes internally that you have to ensure that these frauds don't occur are so critical, at least now, and will be even more critical in times to come.
Great example. And I mean, I think we all have probably heard about business email compromise. If not occurring within your own organization, you know somebody who else has experienced that type of fraud attempt. I know that one of the businesses that I'm familiar with, the assistant controller received an email from the CFO saying, please pay this invoice. And the assistant controller knows that the CFO never ever contacts them via email in this fashion. And so they called the CFO up and said, did you send an email? And they said no, and they found out it was business email compromise. So as Gunita said, fraudsters are getting much more sophisticated. And so if something looks questionable, it's worth investigating before you pay it, because it's much more difficult, as we all know, to get money back after the funds have been paid than before. So keep an eye on that. So, so now let's take a look at, why you want to develop a vendor payment strategy. I think, this is, fairly self-evident and straightforward and obvious, but we're going to take a look at some of the reasons that you want to consider when you're developing your vendor payment strategy. And the first and foremost is you want your vendor payment strategy to be informed by data. You want to understand what's going on with your organization. And then once you have this data, then you can start taking a look at the areas where you need to focus on. So first and foremost, if you're not looking at your payment that go out of your organization, you're leaving yourself exposed to, missed opportunities, exposing yourself to unnecessary risks. And, in a nutshell, if you don't know where you're going, any road is going to get you there. So you're not going to be able to, leverage the data that's within your organization when it comes to payments. And there's a huge amount of knowledge that can be used when you want to be able to kind of leverage and optimize your vendor payments that are out there. So there's huge hidden value within B2B payments that many organizations are leaving untapped because they don't have the data, they're not spending the time, and they're just doing things as they've always done them. And so when you're looking to develop your vendor strategy, some of the benefits that you can receive are shown on the page here, and we're going to go through these one by one. Tim, talk to me about how a vendor payment strategy can help improve working capital management in an organization and what that means.
Yeah, so I mean, I think it's first of all, I would just say one of the great ways that Visa partners with an organization like Bottomline is to go ahead and actually provide this level of holistic a holistic approach to what we're doing with payments with appropriate vendors. What I would say is a couple things on it. First, just to tie back in under the fraud piece, we've been spending a considerable amount of time as it ties to how we think about tokenization, how we think about payment controls, and how we're thinking about, for example, sort of the underpinnings of providing fraud mitigation as we go ahead and actually make payments electronically between buyers and suppliers. When you think about the overall approach to actually B2B payments, what we try to do is actually look up front to say who are all the buyer-supplier relationships that exist. And we also try to do a mapping associated with that to make sure that we have sort of that understanding between that buyer and that supplier to understand what the payment terms are, how they're going to be paid, and as well as trying to reduce some of the, what I would say is some of the fraud elements that might tie to a straight-through processing payment, as well as actually embedding a payment credential in that that is tokenized in that payment flow. So that's one piece of it. The other piece that I would just say is that we also work very closely with Bottomline, and as well as also have our own supplier enablement capabilities to think about how we reach out to that supplier ahead of time to make sure there is that understanding between buyer and supplier before that payment is made. That way something isn't actually being sent into the abyss. There is an understanding from the recipient in terms of actually what they're going to be paid, when they're going to get paid, and the exact amount.
Okay.
And then Bob, if I may, and Tim, I don't know if you were the biggest piece of, vendor payment strategy is there's actually payment types that can turn your AP from cost center into a revenue booster, is how I would call it. Giving cash back, those rebate opportunities really allow for a financial operational department to really convert a cost center into revenue booster, as I know we call it internally.
Yep. And Tim touched a little bit upon improving supplier relationships and why a vendor payment strategy is important to that. Tim, talk to me about how paying a vendor at the right time with the right payment type can help improve a supplier relationship. What are the challenges of not listening to your vendors and how they want to get paid?
Yeah, it's a great question. So one thing that I always think is a little bit of a misnomer is the fact that oftentimes the supplier and the buyer are one and the same. You have suppliers that want to get paid. They want to get paid in a timely manner. Sometimes they want to actually have extended payment terms. At the same time, they're also making payments to their various suppliers. What we try to do is look at it holistically, think about what the terms are that they're looking for. How do we embed that and automate that? Back to the whole point of what we were talking about before about the automation process, so that we can go ahead and actually make it more, I would say, seamless is often a bastardized term, but I would say it's more automated, it's more secure, and it also puts the right terms, back to what Gunita is saying, so they can actually save money in the process in the overall payment flow. So I think there's a couple of aspects to it, but again, back to the point, I often find that we talk about the supplier as sort of this unknown entity when it's one and the same to some degree. It might be just a department on the 5th floor as opposed to the 4th.
Yep, without a doubt. One floor wants to help reduce days sales outstanding, and the other one wants to decrease days receivables outstanding. You're right, and they may just be separated by a floor between the two of them. And reducing cost is one of the areas that a main driver for why you want to develop a vendor payment strategy here. Talked a little bit earlier about the average cost to process a payment is $8.64. There's ways to make payments that are significantly cheaper than that. So if your organization is using more inefficient manual paper-based processes and your costs are $8 or $10 per payment, and you can use an electronic payment method that costs pennies or $1 or $2 overall, throwing in everything, there's a huge savings that can be had here. So that's why you want to take a look at developing a vendor payment strategy to pay the vendor with the right vehicle for them and for your organization, because there's a huge savings opportunity that can exist. And then another benefit for developing, or another reason to develop a vendor payment strategy, is talking about eliminating payment process uncertainty. And Gunita, talk to me about what that means. What does that mean for both the organization that's paying the invoice and the one that's receiving it?
Great question, Bob. Actually, this is such a good one. In times when there's so much uncertainty that is not in our control, market, external factors, pandemic, environment, all of that stuff isn't in our control. But how we manage our AP process is in our control. And that is something we can bring more certainty to by implementing some form of automation. Be it having visibility to your end-to-end payment types or payments that are due. Be it having visibility to all the payments that are due, but helping you prioritize which payments to pay first based on buyer-supplier collaboration that might be happening. From the supplier side, I want to reduce my DSOs, right? How can I negotiate some terms with the buyer to get paid early so that I have that cash flow, right? And from buyer's perspective, when should I pay? Which payment should I pay? Who to pay it to? Having certainty around all three aspects of those is so critical. And there is automation there to support buyers and suppliers with all of these problems and bring further certainty to their lives.
And kind of sum this up, why develop a vendor payment strategy? There's too many organizations out there that have no formal strategy and simply pay an invoice when it's due or when it shows up on their desk. And they're missing out on a huge opportunity to add value to the organization, add not only tactical value by doing things better, faster, and cheaper, but also adding strategic value in taking a look at how we can improve supplier relationships, how we can improve working capital management. So if you don't have a strategy in place, there's many reasons that we show here, why to develop one. So now let's kind of talk a little bit about optimizing your B2B payment mix. Tim touched upon this a little bit here. So okay, you decided you wanted to develop a strategy. Now we need to understand how you can optimize your AP payment mix here. And so there's 10 considerations that we're showing on the screen here. They're by no means every consideration, but if you take a look at these, you'll cover the majority of the options available to you. So, one size doesn't fit all. You need to understand who your vendors are, how you're paying them, where they're located, the frequency of the payments, the size of the payments, everything else along those lines. So you need to segment your supplier base. And this is where I talked about about understanding the data, using data to make informed decisions. So as you're developing your vendor payment strategy, look at how often you're paying vendors and the amount, because you may not, one payment vehicle is better for smaller vendors and one is better for larger vendors. One payment vehicle may be better for a larger payment amount and another one for a smaller payment amount. So before you understand which of the payment options you want to use to pay your vendors, you need to understand who your vendors are, where they're located, whether or not you're paying in domestic and US dollars, or whether you're paying, you have global requirements there. And when you have suppliers that are located outside of the US or North America, there's different rules and regulations that need to be adhered to. So you need to understand, are we going to be making safe payments to them? Are we following all the anti-money laundering regulations that exist there? Are they on a watch list? So understand if your vendor, where they're located, and any rules and regulations that may be incumbent upon payments to those specific areas there. Understand how you're going to be able to integrate, or these payment options are going to integrate to your back-end ERP or accounts payable systems. The last thing you want is to use a B2B payment option and then have to manually get the data from the payment and put it into or update your AP system or your ERP system. So understand how integration works with the various payment options there. If you're using a paper check, how does that information get back into your ERP, into your AP system? Is it automatic? Probably not. It's probably more than likely a manual process there. Understand what your organization's capital and working requirements are. What I mean by that is, many organizations cash flow different. Sometimes they need more cash at certain periods of the year and less cash at other times of the year. And so understand what payment options can help match up best to the needs of your organization there. If you know that your cash flow is lighter and you want to extend out payments, understand what payment options may be able to enable you to do that. If you're flush with cash, look at other options that are available for you. So you want to understand the needs of your organization from a cash flow perspective there. Are there rebates available for the various forms of payments that you're going to make there? Is there a possibility to take AP from a cost center to a profit center by making payments where there's an opportunity to receive a rebate based upon the payment type that's used there? The availability of banking and reconciliation data provided back to not only you, but also to the supplier. How easy is that information to be obtained? Take a look at the cost and the benefit of using each of the different payment options that are out there. There's many different payment options out there. We could probably list 10 right off the top of our heads, whether it's a virtual card, whether it's a purchasing card, ACH, international ACH, a check, any number of different things. Take a look at the different options and understand what the real cost of using that specific payment vehicle is before you make a payment. So you can understand, okay, what's the cost benefit of, if I have suppliers that are smaller suppliers, which one of these makes sense? If I'm making many payments to a specific supplier, which option is the best one? So understand the cost and the value received from using each of the different payment options that are there. Tim and Gunita both talked about vendor onboarding and ongoing support. How do the suppliers get recruited? How are they enabled? What's that experience like? Who's going to do that work for you? Sometimes payment options sound great until you realize that all of the onus for onboarding the suppliers falls upon your organization and not the B2B payment provider. So understand the work that's involved, and who's going to do the work there as well. And then finally, Tim mentioned this.
I'm pretty passionate about that topic. I just want to add one thing. When a buyer is, working with the supplier and influencing the supplier to accept an electronic payment type, often that negotiation is just one-to-one. When a network like ours, or perhaps even Visa, when we call the supplier, we're talking to the supplier based on hundreds of payers or buyers that we have visibility to that is paying to that supplier. And it is not just the payment type. It is now the additional value that comes with each of the electronic payment type, right? Are there better remittance details? Or is there a portal where suppliers can go to? And better yet, we're hearing a lot of portal fatigue. Are there reports that can directly hit suppliers' inbox at the time they need it? I think those are some critical options to look at when you're considering to optimize your entire AP payment mix. Sorry, Bob, I know I interrupted there, but pretty passionate about that point.
No worries. It's an important point. Thanks for jumping in there. That goes to our last point here is the vendor perspective. What's their experience like? Are they going to feel like they're part of the decision-making process there, that the options that are made available to them benefit them? Because they do, they're more likely to use them. So make sure that you are not just choosing something that's good for you. You also want to make sure that it's good for your suppliers, your vendors that are out there, because you'll have much greater adoption and much better relationships over the long term if you're collaborating with them and developing a payment strategy that's win-win for both parties. So
yeah, Bob, can I just make one comment I just would make too on and I want to just tie into what Gunita said is I do believe, like, when I looked at actually the lists that you had on the screen here and for the audiences, I'm not sure if I would rank them in that order either. I think sometimes the vendor perspective can be equally as important as we're thinking about from what's happening from a buyer perspective. And when you think about the vendor, what's the ERP they're using? How do you simplify the overall bank reconciliation process? Certainly the rebate is an important part of it and the financial aspects of it, but being able to capture the right levels of data, depending on what type of vendor it is, I think there's a whole element here as we think about this and we sort of generalize some of the key points in the AP mix. When you go down paths about vendors that are in, for example, the medical field, vendors that are in the field of fuel, vendors that are in the field of travel, they're all going to have various different needs associated with them, and they may actually have different customized ERP systems also associated with them. So there is, I would say, almost like a drill down effect into each one of these, but actually gets very specific. But these all hit the high points of what people are going to be thinking about from both ends of the equation.
Yeah, no, great point, Tim. And this, just to clarify, these weren't ranked in any specific order here. These are things to consider when you're optimizing your mix here. And obviously we can take a look at each of these and drill down. There's many factors that come into play for each of them. We just wanted to close with the vendor perspective there to make sure, as you said, that the experience for your vendors and how they receive the data they can integrate to their back-end systems, what their experience is and what their perspective is, are taken into account as well. Because we all know that if there's two parties in a relationship, if both parties are benefiting, the relationship is going to be stronger and more beneficial for both. So for We're going to take a look at now, one of the options here. Sorry about that. Case for including virtual cards within your payment mix here. Virtual card usage is up significantly and continues to expand year over year. There's good reason for this. There's many benefits for virtual cards when it comes to being able to do things more efficiently, the minimization of the potential for risk that's involved there. Virtual cards are, one-time use only, so it's for a specific payment, typically for a specific period of time to a specific vendor, and can't be, reused. So there's many risks that are mitigated and controls built into the system. They also can be significantly cheaper to use than a number of other payment options that are out there. There's also the ability, as Tim mentioned there, the ability to provide bank reconciliation information back to not only the buyer but also the supplier there to get the information there. And there's a rebate option, for these as well. So there's, the reason why we're seeing more virtual cards used today than we have in the past. There's good reasons for that. And these are the buyer benefits. We take a look here at the vendor benefits, and Tim and I talked a little about Tim mentioned the different floors within the organization, someone being on the AP and one on the AR side. A benefit for virtual cards is the ability to get your funds faster, lower that day sales outstanding as a vendor. And many vendors live hand to mouth and need to get the money from their sales as soon as possible in order to continue operations. So when you're using a virtual card, it enables those payments to be received much sooner, and you can invest that money back into the organization as well. And everything else we've talked about here, from improving visibility as to what's going on when the payment was made, all the banking information provided directly to the vendor as well. And also, as I said, the sooner an organization can get their money, the less time they have to spend calling up the organization who bought their goods or service from them, the more time they can spend on their core business, whatever that may be, whether producing a good or a service or whatever it may be. So less time spent with payments and tracking them down, the more time they can spend on their core business and growing the business and continuing to thrive in the organization. So, with that, I know we've talked a little bit here. I wanted to get to our roundtable discussion here. So as we've been doing here throughout the presentation, we've got some specific questions that we've obtained from participants in the surveys that we've had and key topics around B2B payments and how to optimize the strategy here. So we're once again, here's the pictures of three of us and our titles. So we're going to get straight to it in the roundtables, and I'm going to start off with Tim here on a question here. So I know I kind of, for the sake of time, kind of went through the virtual card benefits a little bit quickly and why usage is up here. But Tim, when you're speaking with organizations, both at the buyer and supplier level, what are some of the common misconceptions about virtual cards that come up, and how do you overcome them?
Yeah, so great question, and I'll try to hit this one specifically in our partnership with Bottomline. I think that virtual cards have come a long way, and probably two things I would say is, with the rise of organizations like Bottomline and the expertise they bring to the table from a fintech standpoint, a lot of what I would say is the clunkiness of an email being sent to an organization, someone having to go ahead and actually pull up the email, click on the link, go in, make the payment, the key in the account number. A lot of that is really something that we're thinking is starting to really dissipate. There's much more focus now on how we're actually going ahead and, one, automating the overall straight-through processing process. Two, I would say it's the enhanced reconciliation that organizations can go ahead and actually look at what's been paid and tying that back to the penny of the amount. And then the third part about it, I would say, is that there are organizations also that are helping really on the receivable side of the equation here that are also helping support virtual cards. it's a one-to-one relationship, and I think there's also a tremendous amount of fraud mitigation associated with virtual cards that also comes into play. So in sort of a rapid way, I would say those are some of the bigger items.
And Tim, for those listening in that may not be familiar with the difference between a virtual card, a ghost card, a purchasing card, and a credit card, can you explain that so people understand the differences?
Yeah, and you know, this is also a good example of sort of the evolution of virtual cards. You know, where people used to think about a lodge account that was a store and rotate account that would be in the system, versus what is a true single-use account number that's being used once and only once to go ahead and actually make a payment. That payment's requisitioned, or that virtual account number is requisitioned specifically for that payment that might tie to the PO or to a line item in a PO. So there is a much more level of, like, let's say, a surgical usage of that account number that is not necessarily a physical piece of plastic that might be used on a continual basis to make payments on a recurring basis. So certainly something that has evolved and something that we're very excited about as we're trying to reduce, say, fraud in the industry.
Okay, great. That brings us to our next question. Gunita, I'm going to ask you this question. So, you know, when talking to customers and prospects there, what do you see as the growing appeal? Why are more organizations interested in using virtual cards in the mid-market and even the large market?
Yeah, I think, Bob, it's a great question. When we talk to mid-market or large market enterprise customers, we think of problems they're experiencing, right? So when we go in, we hear automation, big issue, convert check to electronic. We hear security, fraud risk. We hear working capital optimization. And guess what? Virtual card not only solves for these three, but solves for further much more. And the growing appeal is definitely coming from the perspective, I'm not going to explain these, but like, you know, virtual card being a revenue booster, virtual card being a cost buster, right? Where you individually have to call, if someone's even accepting ACH, Bob, you have to call the vendor to get the bank account details here. You just send the card via an email. Now, there is a misconception that sending that card via email isn't secure. But keep in mind, organizations, networks like Visa, including MasterCard and ourselves and other fintechs, have come together to solve for those problems. The other is, of course, reducing fraud, right? So you create a virtual card. It is that 16-digit for one payment, for that particular payment amount, for that particular recipient. So what I mean by that is, Bob, if I created a virtual card for you and it is for $50, it's a gift card, let's say, only you can process it. And you cannot process it for $60. You cannot process it for $40. If it's created for $50, you will only process it for $50. And guess what? I want better reconciliation. So when I get the data back, I know exactly, you know, what it was created for. It's a one-to-one. So like, you know, if you're creating tens and thousands of virtual cards, individual account, or I should say card, is associated with one payment. So reconciliation is so much more easy. Then last but not the least, I would say, you know, when you're looking at large and mid-market organizations, they're not just looking at virtual card for their AP payments. They're also looking for their T&E expenses. They're looking at it for, you know, their one-time purchases, their utility payments. I think the expanded use case that virtual card really solves for is why I think we see a growing appeal from large and middle market businesses.
Great. And Gunita, as long as we have you, why don't we continue with you for the next question here. When we're talking about supplier acceptance of electronic payments, you know, what are the most important factors to getting suppliers to accept electronic payments? Because we know that many organizations out there are used to paper checks. There's inertia. They have all these preconceived notions about electronic payments being more difficult and not secure and losing the float. So when you're onboarding suppliers to get them to convince them to take an electronic payment, what are the most important factors that you discuss with them?
So there's plenty of factors. You know, when you keep yourself in supplier shoes, they're delivering the goods, they're delivering the value to the buyer. Right now it comes time to payment. What do they care? Payment time, cost of acceptance. They care about value. They care about days sales outstanding. They care about when we're talking to the supplier, we want to make sure we're nurturing that buyer-supplier relationship on behalf of the buyer. If we want to promote electronic payments, we are offering early payment terms. We are offering those types of solutions to the supplier so that they can accept electronic payments, but get paid early. Get the value out of payments from network like Paymode-X. When I say value, it is better remittance detail. Get a mobile app. You can easily get your scheduled report of all your payments that you're receiving through Paymode-X right into your inbox. So kill that photo fatigue. So I think we really put ourselves in supplier shoes and looking to bring value on the supplier side for accepting electronic payment types.
Tim, question for you, kind of out of left field here. What is the the most unique reason that you've heard from a supplier for not wanting to accept the payment?
It's a good question. What is the most unique? I think the uniqueness comes down back to my reference to certain verticals. I think there are certain industries that are pretty set in their ways of using what I would say traditional payment types. And so there is a level of apprehension in terms of actually, for example, let's just say in the healthcare industry to go ahead and actually move to that, possibly based on what is the perception of the cost of acceptance. And so one of the things that we've really tried to do over the last several years, and many organizations, including our partnership with Bottomline, have been doing is really creating that variability. So it's really more of the payment terms are set between that unique relationship. Many organizations right now still look at it like, oh, well, if I'm going to accept a virtual card, I'm going to be paying, 2.5% or whatever it is. And depending on the size of that organization and the size of the payment, that can be something that is, not necessarily, appetizing. So what is changing is the ability to go ahead and actually change those rates and actually look at those rates based upon the industry type or the relationship between the buyer and the supplier.
Okay, great. And keep you here, Tim, for the next question. There's many options out there for B2B payment providers there. How do you recommend organizations that are looking to digitize their payment process evaluate the different vendors? What are things for them to consider?
Yeah, so a number of different factors. I would say, one is certainly the integration component that you referenced before. If some organizations already have, for example, in-house SAP system, they have an Oracle system, they have something that's more sophisticated, more of a larger scale ERP platform, that is certainly a consideration where they're looking for the expertise. I would say the other part of it is the ability for some level of professional services in terms of going ahead and actually supporting and facilitating that payment flow. So if it's coming in, you mentioned before, Gunita, ACH, if it's coming in through a virtual card, if it's coming in through whatever the payment type is, having that expertise also in-house. And then I think the third part of it is being able to have the conversation with the vendor or that organization to understand, for example, the benefits that it's going to provide to them. So if it is a tokenized transaction, the reduction of fraud, if there is a compromise, if there are certain levels of data they're looking for to go and actually use that to reconcile back to the initial payo, that also is a consideration. So there's several different factors I would say there. We probably could have a whole panel session on this topic alone, but I would say that those are some of the bigger factors.
Great. And Gunita, over to you. Question is, if two B2B payment providers say they have supplier enablement services, that means they're offering the same services, right?
Not really.
Yeah.
Go ahead, Tim.
Yeah. Go ahead.
No, go ahead.
No, I was just going to also say the level of expertise in an industry. And I think, I've been in it before, but I do think that if you're talking to an organization that's very, very much specific to travel, they may have different levels of data that they're looking for. If they're talking about, and same thing what I would say is in the fleet and fuel space, if you're talking about somebody that's more in the traditional accounts payable space, there may be what I would say is also a different level of understanding of what they were trying to integrate into. So I think that's also a deciding factor. Go ahead, Gunita.
Yeah, I was just gonna say, from my perspective, it's not the same. Everybody has a different definition of vendor enablement. What I would say is, if you're evaluating vendor enablement services offered by various B2B payment providers, some of the questions top of mind that you want to ask are, will that particular B2B payment provider help nurture your buyer-supplier relationship? Will that B2B payment provider optimize your payment mix in a way that further nurtures your buyer-supplier relationship? Will that B2B payment provider offer the best payment type or the best payment for when it's due? All of those, metadata that you want to consider when you're paying a supplier, keep in mind. Last but not the least, will that B2B payment provider maximize my rebate opportunity? I think those are some questions I would ask when you're choosing or looking at a B2B payment provider for vendor enablement services.
Oh, great points. And I think I would also enter the mix and get customer references when you're talking about different B2B payment providers. Talk to customers that are using the various solutions and ask them the questions when it came to supplier enablement, when it came to supplier support, when it came to banking and receiving banking reconciliation information, when it came to optimizing the amount of rebates and the payments, who did the work and how effective were they at doing this. So, you need to kind of peel back the layers of the onion a little bit. Just because somebody says we do supplier enablement, it means different things. So understand what it means and who's going to do the work and the level of thoroughness of each of those specific areas when you're evaluating the different vendors that are there. And it's something that we've covered at Ardent Partners, talking about how you do solution selection and how you select a vendor. And so there's some information that we can share with you if someone's interested in discussing that topic a little bit more. And then finally, I know we're coming close to the top of the hour here. So one last question for our panel here. Let me start with Gunita, bring you back on there. So in a nutshell, we've kind of talked about this, and answered this in a different fashion, but how does optimizing B2B payment strategy help your organization to grow, to increase profits, to become more strategic?
Then I would go back to having a vendor payment strategy or a B2B payment strategy is a cost buster, right? Where you're eliminating manual tasks, eliminating paper, eliminating checks, where your teams are focusing on more strategic tasks, more tasks that will help you use accounts payable as a lever to take care of and optimize your working capital. I would say revenue booster. We've discussed payment types that offer cash rebates back to the buyer, right? Where it turns the AP from cost center into profit center. I think all of the things we've discussed thus far, without going into the details of fraud risk opportunity, the ability for a B2B payment provider to really manage your vendor enablement, to really take care of those bank account changes that today you're manually taking care of and possibly even writing on a post-it. So I think keeping all of those things in mind, a true strategic B2B payment strategy will really help nurture your buyer-supplier relationship, help you grow, help you become profitable.
Tim, anything to add?
No, I think that's perfect. I mean, cost savings is a big aspect of this too, and looking holistically at what you're doing, the payment types you're using, all the vendors or supplier relationships you have, bringing that all together really helps the company save money and also helps to really drive those relationships with your end suppliers. So I think that's it.
Yeah, great. I completely agree. I think, another way to take a look at this is not only from the reducing the costs and improving efficiency, but also when you take a look at how you mitigate and prevent risks from occurring within your organization, the less time your organization has to spend, solving payment errors to the wrong providers. It's a huge drain of resources. It's also a possibility that it may impact the perception of your organization in the public. And so, are you going to want to do business with an organization that has been the subject of fraud more than once and was in the press? So by there's unintended consequences as well here. So by optimizing your payment strategy, mitigating the fraud and mitigating the risk and improving the controls and the processes in place there, you're ensuring that your organization isn't spending time and energy and money on fraudulent activities and non-value adding activities. By optimizing the process here and developing the strategy, you're able to take your organization and have them concentrate on things that can add value to the organization to help it grow and sustain the profitability going forward there too. So make sure that when you're looking at this optimized B2B payment strategy, you're not only looking at the cost savings, which is the huge amount of cost savings that can be had, but also look at the intangibles, from improving the processes, the mitigating the risk, improving compliance. Overall, there's many different ways to look at this. So I would add that in addition to everything else we talked about here, is make sure you look at the intangibles as well as the tangible benefits with what's going on. So I think we've gone a little bit over here. And so for out of respect for everybody's time, just wanted to say any questions that were asked by the attendees, we'll get back to you afterwards. And on behalf of Tim and Gunita, I want to thank you for spending some time with us this afternoon. Hopefully you found this webinar informative. And if you have any questions about the topic, about B2B payments, please feel free to reach out to any one of us here. Our contact information is shown on the screen here, and we'll be more than happy to talk to you about developing a payment strategy, optimizing your payment mix, what to consider, things to avoid, etc. There's a wealth of knowledge that Tim and Gunita possess here. And I encourage people listening in to take advantage of the opportunity to contact them and to find out a little bit more and to have your, some of your questions answered there. So, with that, on behalf of Bottomline and Visa, I want to thank you for your time and wish you a great afternoon. Thank you.